off of its high on February, like mid-February. So the S&P is down about 6% and change. The Nasdaq's down, as of this morning, was down 15% off of its high. So we're starting that. In my view, we're starting that reconciliation process. Is it going to be linear? No, but the chaos has begun. That's clear. The Fed cannot. They're handcuffed. They cannot proactively cut interest rates at this moment. They're frozen. So there's no Fed put. There's no Trump put anymore because the zeitgeist was that Donald Trump was going to come in and he's going to measure his success on his administration by the stock market. And he told you, no, I don't care about the stock market. To his credit, to have the courage to say the U.S. has some intrinsic issues that have to be fixed.
You're watching Silver News Daily. Subscribe for more.
Everything we've covered, runaway inflation, a trapped Federal Reserve, global trade wars, silver's industrial dominance, a worsening supply deficit, and the unraveling of market manipulation, is leading to one inevitable conclusion. Silver is primed for a breakout unlike anything we've seen before. The setup is undeniable. Every time silver has faced these kinds of conditions, monetary chaos, institutional short squeezes, and supply shortages, it hasn't just risen, it has skyrocketed. In the 1970s, silver soared over 700%. In 2011, it surged nearly 500%. And today, with all these forces colliding at once, the move ahead could be even bigger. Michael Pento and other experts aren't just speculating. They see the reality. Silver is at the center of an economic storm, and the window to act is closing fast. The institutions who once suppressed silver's price are now scrambling to secure physical supply. The market is waking up, and when the breakout begins, it will be too late to get in at today's prices. So, where does that leave you? The choice is simple. Pay attention, stay informed, and be ahead of the curve while the rest of the world sleeps on silver's potential. Because when the dust settles, those who understood what was coming will be the ones who benefit the most. And remember, this is not financial advice. Always do your own research and consult with a financial professional before making any investment decisions.
Now, recently, within the last few days, slight flashing yellow, is financial conditions and credit spreads. I need to see financial conditions tighten more, and I need credit spreads to widen more than they are now, before I become net short in the portfolio. That's something you don't do willy-nilly. You have to calculate it. You have to measure and map it carefully. But here's the thing, the important part is when you're managing money, if you want to be a successful money manager, is to understand the risk-reward ratio. What you should ask the question, and I know you would because you're such a great interviewer. What made you get almost neutral in your portfolio? I'm net long 20% with hedges, with gold and with anti-beta plays and with a short and junk bonds, a small short and junk bonds. What made me do that when everybody else was banging pots on roofs about how great 2025 was going to be? And it's just simple calculation that the risk reward ratio was skewed way to the negative as far as any significant increase in returns on the S&P 500. And we were trading at 22 times forward earnings that predicted a 13% increase in earnings. Now, 22 times is a very rich multiple on earnings growth that just was unachievable. When you have labor force contracting and when you have tariffs, and you're hoping to extend tax cuts at the current rate. That's the scenario. That's the fiscal and monetary scenario. And by the way, the Fed put is on ice. The rate of inflation, which is very sticky, it's not gone anywhere near 2%. It's been north of 2% for 4 years. The Fed cannot. They're handcuffed. They cannot proactively cut interest rates at this moment. They're frozen. So there's no Fed put. There's no Trump put anymore because the zeitgeist was that Donald Trump was going to come in and he's going to measure his success on his administration by the stock market. And he told you, no, I don't care about the stock market. To his credit, to have the courage to say the U.S. has some intrinsic issues that have to be fixed. Number one, we can't have massive trade deficits anymore. We can't have a hollowed out middle class. We have to bring manufacturing back to the United States. It's a matter of national security. So he's, for now, has the courage to, through the use of tariffs, and I'm not saying that's the best method. There could have been other methods. There could be better, the way these tariffs were issued, implementation of these tariffs could have been improved, can be improved still. But there's just no way you were going to get nominal GDP growth anywhere near double digits or even high single digits. At best, I get nominal GDP growth around 5%. And that means that the market should be trading around $5,100. The S&P 500 around $5,100. If you say there's no recession, we have a moderate growth in earnings, nominal growth in GDP of around 5%, and earnings growth tends to correlate highly with nominal GDP growth. And
For years, silver prices have been held down by powerful institutions playing a dangerous game. Big banks, hedge funds, and central players in the futures market have been shorting silver, betting against its rise and keeping its price artificially low. But here's the problem with price suppression. It only works until it doesn't. And right now, the cracks are starting to show. We've seen this before. Back in 2011, silver was on fire, surging toward $50 to an ounce. Then suddenly, a wave of massive short positions crushed the rally. Banks, led by JP Morgan, were accused of manipulating the silver market, and regulators looked the other way. The price collapsed and silver was pushed back into the shadows. But today, the market dynamics are different. The players who have been shorting silver are now running out of ammunition. COMEX silver inventories have hit historic lows, and the available supply to back up all these paper contracts is shrinking fast. This means that if enough investors start demanding physical silver instead of paper silver, the whole system could unravel. A true short squeeze, where short sellers are forced to buy back silver at skyrocketing prices, could send silver soaring past its all-time highs. We've already seen signs of this happening. Lease rates for silver have spiked, indicating extreme stress in the market. Meanwhile, massive deliveries of silver from London to U.S. vaults suggest that big players are scrambling to secure physical metal before it's too late. And if the momentum builds, this could set off a chain reaction, forcing institutions to cover their short positions at increasingly higher prices. Michael Pento has been warning about this moment for years. He knows that market manipulation can only last so long. And when it finally breaks, silver won't just rise, it will explode. And with the Federal Reserve trapped, inflation raging, trade wars escalating, and supply running dry, we are standing at the edge of that moment right now. So, what happens next? What does this all lead to? The answer is simple. The biggest silver breakout in modern history, and that's exactly what we're about to dive into.
A lot of room to run simply because our deficits are just incredible. You know, a $2 trillion deficit. That deficit is going to explode to the upside if we have, and we do have, an economic slowdown. You know, if you look at the Atlanta Fed, it was they were in February of this year. When I looked at my calendar, it's only like, mid-March, right? So, in February of this year, the Atlanta Fed had Q1 GDP at close to 4%. And how these small businesses are hiring and what's affecting their businesses is not good right now. So you're not going to get 13% earnings growth, especially when there's no tax cut of any significance on the horizon. Now, the 2018 cut was from 35% to 21%. That's a pretty big boost to corporate America. There's no such boost coming. You're probably going to get the votes. I'm very confident that you get the votes to extend the Tax Cuts and Jobs Act under Donald Trump that was effective in 2018. But that's just keeping the current rate. So you're not going to get a massive tax cut. You have the closing of the border. You have deportations. You have tariffs, which are tax increases. You're going to need tariffs to offset the way they score it in D.C. to offset the ability for Congress to avert a $4 trillion increase in taxes because the Trump tax cuts expire. They sunset in December of this year. So how are you going to get 13% earnings growth? It's not going to happen. It's just not going to happen. The best case scenario is 5% that I can come up with. And if that's the case, then the stock market is still very overvalued, and it's not going to become even mildly interesting.
The silver market is running on empty. For the fifth consecutive year, demand is outpacing supply, and the deficit is only getting worse. This isn't just a temporary imbalance. It's a structural crisis, one that could send silver prices into uncharted territory. According to the Silver Institute, the global silver market is on track for another massive shortfall this year. In 2024, the deficit stood at 182 million ounces, and while 2025's shortfall is projected to be slightly lower at 149 million ounces, it still represents one of the largest supply gaps in history. Meanwhile, total gold supply is rising, up 1% year over year. That means while gold availability is increasing, silver is becoming scarcer by the day. And here's the problem. This isn't something that can be fixed overnight. Mining production is struggling to keep up with demand, and recycling efforts aren't making up the difference. Unlike gold, which is largely hoarded and reused, silver gets consumed. It's used in industrial applications, electronics, solar panels, and medical devices, and much of it is never recovered. At the same time, investment demand is surging. Silver ETFs are hitting record highs, and physical silver stockpiles are being drained at an alarming rate. Major vaults in London and New York are reporting some of the lowest inventories seen in over a decade. The result? A tightening squeeze on available silver, pushing prices higher with every passing month. Michael Pento has been sounding the alarm. When a market runs at a deficit for this long, it doesn't just correct itself, it breaks. And when it does, prices move violently. We've seen this before. Silver has a history of going from underpriced to overbought in a matter of months. And right now, all the ingredients for another historic run are in place. But there's one more element to this story, one that could trigger the most explosive move yet. For years, silver prices have been artificially suppressed by the biggest players on Wall Street. But now that manipulation is starting to crack. And when it does, silver could experience a short squeeze, unlike anything the market has ever seen.
President Trump, is just say, yeah, okay, April 2nd, we're going to have reciprocal tariffs. And then you give yourself a month or whatever it was, maybe a little bit more, to negotiate with all these countries on an individual basis. Say, here is our trade deficit with you. A trade deficit is not supposed to be a standard procedure here. You need to buy more of our stuff. What do we need to do? What do you promise to do to make that right? And you have tariffs on our autos, or tariffs on our steel, or tariffs on our crops, whatever. And they need to be commensurate with the tariffs that we have on you. Well, hopefully the tariffs will be zero. Of course, there's other factors. There's subsidies that governments have. So these have to be worked out. But you had about 4 or 6 weeks to do it. But here's what can happen, Kai. What's happening is, the tariffs were going on Mexico and Canada at 25%, and then 24 hours later, the stock market fell apart, and so the tariffs were postponed for 3 months, and then there's carve-outs, and everybody wants to carve out for their industry, and you just have no idea what's going on. So I think the most important thing is businesses need some kind of confidence.
Silver is often seen as gold's little brother, a cheaper alternative, a secondary safe haven. But right now, silver isn't just following gold's lead. It's outperforming it. And there's a reason for that. Unlike gold, which is primarily used as a store of value, silver has a secret weapon: industrial demand. Nearly half of all silver consumption comes from industrial applications, and that number is only growing. From solar panels to electric vehicles to high-tech electronics, silver is embedded in the industries shaping the future. And here's where it gets interesting. Unlike other metals, silver has no real substitute. If manufacturers want efficiency, conductivity, and durability, they need silver. Period. This is why silver has a dual identity. It's both a safe haven asset and a critical industrial metal. And right now, both sides of that equation are firing at full force. Investors are pouring into silver to escape inflation and currency devaluation, while industrial demand is surging as the global economy pivots toward green energy and advanced technology. Meanwhile, gold, while still an essential store of value, isn't benefiting from the same level of industrial usage. That's why silver's price movements tend to be more explosive. Historically, when silver starts running, it runs harder and faster than gold, and the numbers back it up. Over the past year, silver ETFs have surged over 34%, while gold ETFs have gained 37.6%. But here's the key. Gold is already near its all-time highs, while silver is still drastically undervalued relative to its past peaks. That means silver has far more room to climb. Michael Pento has been tracking this trend closely, and his conclusion is clear. Silver is not just keeping pace with gold. It's setting up for a breakout of its own, driven by forces that even gold can't match. And the biggest of those forces? The looming silver supply deficit, a crisis that's been years in the making and is now reaching a breaking point.
Inflation is a huge problem. I mentioned earlier that 4 years now it's been above 2%. And tariffs are a one-time tax, a one-time increase in the level of prices. So it is not by definition inflation. I define inflation, and I've been in this business 34 years, and I'm 61 years old. So I have a right to chime in about what I think inflation is, because you know what, if you listen to the Federal Reserve, inflation comes from too many people being employed and too many people being productive. That's their definition of inflation. It's actually, the most incorrect of all of their models and philosophies that they hold on to. Inflation is when the market loses faith in a fiat currency's purchasing power because it's been destroyed by monetizing government debt. That's how inflation arises. So it's an inexorable, it's a protracted increase in the level of prices, continuous and protracted, because the market has lost faith in the purchasing power of a fiat currency. We don't have that yet. We're headed down that road, and tariffs are not part of that calculation. Will they increase prices? Yes, they absolutely could. Now, there's other ways. Let's just, you mentioned tariffs. Let's just talk about it for a second. The exporting country that the tariff is, the duties imposed on, could eat in their margins and cut their prices. The exporting country could also wreck the value of their currency, so there would be no change. You could source products. The importing country can source their products from other nations. The importing nation, the United States in this point, can also take or eat some of those tariffs and decrease their margins. So it's not an like 25% tariffs on X, Y, or Z product is not a 25% increase in prices automatically for the end user, for the consumer. But they are a one-time price shock. Again, when you have a problem with inflation, the worst thing that you could do then at that moment, for as far as inflation is concerned, is to have that one-time increase.
Trade wars are no longer just a headline. They're a direct threat to global markets, and silver is right in the middle of the chaos. With tariffs escalating, supply chains breaking down, and international tensions running high, the silver market is being pushed into uncharted territory. And here's why that matters. Silver isn't just a safe haven asset. It's a critical industrial metal, meaning it's being hit from both sides: surging investment demand and tightening physical supply. President Trump's latest wave of tariffs has sent shockwaves through the economy, especially with key silver-producing nations like Mexico and Canada facing steep trade restrictions. The U.S. imports roughly 70% of its silver supply, and with retaliatory tariffs in play, the cost of getting silver into the country is climbing fast. But that's not all. Producers and refiners are already dealing with rising costs. And now, the uncertainty surrounding trade policies is making it even harder to secure stable silver supplies. This kind of disruption doesn't just create short-term price swings, it fuels long-term structural imbalances. We're already seeing lease rates for silver spike, signaling mounting stress in the physical market. A silver squeeze is brewing, and as stockpiles dwindle, prices could break out in a way that catches even seasoned investors off guard. Michael Pento has been vocal about how these trade wars aren't just affecting silver. They're accelerating its rally. The more unpredictable global trade becomes, the more investors look for stability. And when safe haven demand collides with a tightening supply chain, silver moves with a force that the market simply isn't prepared for. But there's something else giving silver an edge over gold right now, something that's shifting the entire investment landscape. It's not just about fear-driven buying anymore. Silver has a unique advantage, one that could push it even higher than gold in the months ahead.
Of the market in the purchasing power of your currency. That's what inflation is all about. It's not about people working, and it's not about tariffs. If we did have a cessation of all tariffs, I think it would be very bullish for the economy and for markets. That's how I'd react to it.
Yeah, 100%. I fully agree there. Michael, really, really appreciate your insights. It was a wonderful conversation. Where can we follow your work? Where can we find more of you?
So the website is pentoport, P-O-R-T.com. And if you have $100,000 to invest and you are a U.S. citizen, and if you qualify for the portfolio, if you're suitable for it, because I actually actively manage the portfolio, so I could raise a lot of cash. I could short the market using ETFs. I don't use margin, leverage, or options. And if you're suitable for that kind of portfolio, U.S. citizen, $100,000, I'll directly manage your money in the inflation, deflation, and economic cycle portfolio. If you don't have $100,000, and if you're not suitable for that kind of portfolio, you can have access to my podcast called the Midweek Reality Check. It's published every Wednesday. It's usually about 10 to 15 minutes and gives you all of the relevant economic data that came out in the week, and an objective and honest assessment of how you should look at that data and where it fits.
Inflation isn't just a number on a government report. It's a relentless force, silently devouring savings, wages, and purchasing power. And despite what the official figures say, the reality is far worse. Every trip to the grocery store, every utility bill, every major expense is proof that the cost of living is rising much faster than the so-called experts admit. And the deeper inflation digs in, the more people start looking for a way to protect themselves. Historically, gold has been the go-to inflation hedge, but silver? Silver is the underdog with the most explosive potential. Unlike gold, which is already trading near all-time highs, silver is still far below its historical peak, meaning the upside is massive. When inflation surges, silver has a habit of playing catch-up, and when it does, it moves fast. Look at what happened in the 1970s. As inflation spiraled out of control, silver didn't just keep pace, it obliterated expectations, soaring over 700% in a few short years. The same thing happened during the 2008 financial crisis. As trust in the banking system collapsed, silver shot from $9 to nearly $50 an ounce. And today, inflation is back with a vengeance. Central banks are trapped, and silver is still trading at a fraction of its potential value. Michael Pento sees the writing on the wall. He knows that the combination of Fed mismanagement and runaway inflation is setting the stage for silver's next historic breakout. The demand for real assets is rising, and those who wait until the headlines confirm what's happening will already be too late. But inflation isn't the only major force driving silver higher. There's another factor, one that's shaking the foundations of the global economy right now: tariffs and trade wars. And if you think the market volatility we've seen so far is bad, just wait until you see how this next crisis plays out.
It went up to $9 trillion. So that's $9 trillion from $700 billion. Okay, when I went to school, that's $8.3 trillion of the Fed printing credit. That's Fed credit, Fed reserves printed willy-nilly by fiat to battle a housing bust, the banking crisis, and then COVID. That tells you something about why gold has been doing so well lately. Try increasing the money supply, the gold mine supply by 20% per annum year after year. It just can't happen. It's physically impossible. First of all, you don't have a set. I always say like 95% of people that do what I do are salespeople. That just like, okay, give me your money, and then I'll plug it into the S&P 500, and I'll offset it with some ballast from some bonds, some part of the yield curve. I don't know. And then I'll take some and maybe throw in some overseas equities and see what happens. And I'll go on to the next person. And then what I do is differently. I actually sit there and say, I'm not going to set it and forget it. This is not a set it and forget it time to manage money. Maybe it was in the 50s and 60s, but not now. especially not, since 2000, and really since this new era of interest rate repression, where you saw real interest rates at -8% on the Fed. The real Fed funds rate was -8%. That is never before even close to being thought of happening. So you have this is the regime of helicopter money, of ZERP and QE. In fact, it's worth mentioning that the Fed's balance sheet was $800 billion prior to December of 2007.
The Federal Reserve is stuck in a trap of its own making, and there's no easy way out. For years, it propped up the markets with near zero interest rates, endless money printing, and stimulus packages that flooded the economy with cheap cash. But now, the consequences have arrived. Runaway inflation, a fragile banking system, and an economy that's teetering between stagnation and collapse. And here's the kicker. The Fed has no real solution. If they hike interest rates too aggressively, they risk triggering a full-blown recession, sending stock markets into freefall and crushing the over-leveraged financial system. But if they pause or reverse course, inflation spirals further out of control, eroding the value of every dollar in existence. Either way, trust in the central bank is evaporating. And when people lose faith in fiat currency, they turn to real assets. Gold, yes, but more importantly, silver. This isn't speculation. We've seen this play out before. When the Fed loses control, investors panic, and safe haven demand skyrockets. Back in the 1970s, when inflation ran wild, silver surged over 700% in just a few years. More recently, during the 2008 crisis and the Fed's unprecedented interventions, silver exploded from $9 to nearly $50 in under 3 years. And today, the same pressures are building, but this time the stakes are even higher. Michael Pento has been warning about this moment for years. He sees what's coming, a financial system backed into a corner, forced to choose between economic collapse and currency devaluation. And when the realization hits that the Fed can't save the markets without sacrificing the dollar, silver's price suppression will shatter, unleashing a rally that could dwarf anything we've seen before. But inflation isn't just a symptom of Fed mismanagement. It's a silent thief, eroding wealth faster than most people realize. And it's one of the biggest reasons why silver is becoming the ultimate hedge against the chaos ahead.
Against the flawed fiat currencies it's measured against, you have to go on a country by country basis. Right now, it looks like the dollar could be even losing ground against other currencies for the time being because of our slower growth rate. So if our interest rates are coming down and the growth rate is slowing, then that makes holding dollars less appealing. And then we could also get into the fact that our government is prone to sanctions and confiscation of other countries' wealth, freezing their assets. So foreign countries are eschewing our dollar with their trade surplus. So they no longer want to buy, to recycle their trade surplus into our bonds and in our dollar. So that's also part of the bullish gold story and the weakening of our currency.
Silver is on the verge of something massive. The market is shifting, the pressure is building, and when it finally erupts, the shockwave will be felt across the financial world. We've seen silver rally before, but never with the kind of forces pushing behind it today. Inflation is running hot, the Federal Reserve is trapped in a corner, and global trade tensions are shaking the foundations of the economy. And at the center of it all, silver, an asset that's been suppressed for years, now ready to explode. Michael Pento, a seasoned market analyst, isn't just throwing out wild predictions. He's looking at the numbers, the trends, and the historical cycles. And he's saying what most of Wall Street refuses to acknowledge. Silver is on the brink of a game-changing move. The last time we saw conditions like this, silver skyrocketed, shocking investors who weren't prepared. And this time, the setup is even bigger. But what exactly is driving this? Why is silver positioned to surge past expectations? And most importantly, how can you stay ahead of the coming storm? Stay with me, because by the end of this, you'll understand why silver isn't just another investment. It's the lifeline the markets are turning to in the chaos ahead.
0.4%. Okay. So that's still very much close to a recession and stall speed for the economy. So I increased my gold position. I've had it. First of all, let's just talk about gold. 5% of your net worth should be in physical gold. I don't change. I never change that mantra from me. That is my recommendation. You always have a placeholder of your wealth that cannot go down. Your purchasing power cannot be ruined by a fiat currency if you have 5% of your assets in gold. And then I toggle the difference between 0 and 20% in what I call liquid paper gold. And that is not, you don't really own gold unless it's in your physical possession. But if you're going to rely on a third party, then it becomes an investment. So if you have gold that's in a vault somewhere or in a bank somewhere, you don't really own your gold because there's a third party between you and your gold. There's also gold miners. There's gold ETFs. I toggle that between 0 and 20% against liquid gold. In other words, you don't have to find somebody to buy it. You don't have to, it's cumbersome. You have to mail it somewhere or take it somewhere to make it liquid. You could just, in a second. So it's liquid because it's in ETFs and in stocks. And it's paper because it's not really gold in your possession, between 0 and 20. And we're close to 10% right now. And why? Why is that? Because nominal rates are now falling and real interest rates are falling. And that is the perfect time to own gold.